Welcome back to Fast Market, everyone. Now it's time for our cash tag section. Alex Coffey and I now want to welcome the co-founder of LikeFolio.com, Mr. Landon Swan, to the show. Landon, full disclosure, I had Chipotle for dinner last night. I like the tacos, actually, is my favorite. You've got some data on Chipotle. How's this company doing? Are they able to bring people back in the stores, keep digital strong? How is this company doing, and how are they doing with inflation? Because their CEO, Landon, says that they're a little bit immune from inflation.
He has said that. You're right. I'm a burrito bowl guy, by the way.
Very
I like
nice.
the burrito bowl.
It's my daughter guy.
But I tell you what, listen, the in-store sales are up about 22%, and the digital sales are down. They're declining. They've gone from Q1, they were 42. Then 39 in Q2, then 37 the last quarter. So I'm expecting that to continue to fall as people favor going into the stores. And that jives with our food delivery data. All generic food deliveries down about 20%. So people are actually going out to the stores more and getting food delivered less. But with Chipotle, I think you're right. I mean, I think they do have some immunity. There's certainly a lot of concern with food prices. I mean, food prices are up about 10% year over year. Food price concern as a social metric has doubled year over year, so people are definitely concerned about that. But the stock has done really well. We're back up to about the 1,700 range, which is, if they don't break through here, it's going to be a triple top because they hit it in August, they hit it in September, and now we're hitting it in February. And you can see here the green line, the purchase intent. This is people saying that they're going to either order from or they're eating at Chipotle. It's really not impressive, frankly. I mean, its purchase intent is down slightly on a year-over-year basis. Their prices are up, so that's one thing that you've got to take into account is LikeFolio looks at feet in the store, basically, but we don't know how much each person is spending. So we know they're spending more because all the prices are up. But if they're doing a good job of maximizing each customer by getting add-on orders, then they're going to beat the feet in the store type metrics. But those are down. Actually, their happiness is fairly low. If you compare McDonald's, Chipotle, Shake Shack, and Young, and you kind of put them into a scatter plot, then you'll actually see that Chipotle's got the lowest happiness of the group at 58%, lower than McDonald's, which a lot of people I think would lose money on that bet. And the caveat there is that they're over to the right, which is where you want to see. I mean, they're on the wrong side of the zero line, but they're doing better than their competition. Not quite McDonald's. McDonald's has beaten them in both categories, but they're doing better than Yum and Shake Shack, and they're right in line with how things are looking when it comes to sit-down restaurants versus fast casual versus fast food. I would say that they're fast casual, and that is about a negative 9% on a year-over-year basis. So they're right in line with that. Mexican's only negative 2%. So there's a lot of factors going into play here, but I think the story is that Chipotle it's a good long-term company, but right now where they're at, their happiness is way lower than I would like to see. Their purchase intent is not running up. They're able to hold on to customers with the higher prices, which is a good thing. But when you throw into the mix, the stock has been on a tear lately and is now hitting those points where we've seen resistance at 1,700, and it's just gone straight up to 1,700. So we're hitting that point now right before earnings. I think it's setting up a bit of a tough case for the bulls, and I would be way more comfortable on the bearish side.
Yeah, a lot obviously to explore there, Landon, but a great breakdown. The one thing with Chipotle is it's been just so difficult to bet against it through the years. It seemingly continues to press its bets. It's expanding aggressively through the years. It's been in that nice niche of, hey, it's fast enough that you're not going to spend a significant amount of your day or your time picking it up or eating it in store. But it's also been able to at least control the narrative in terms of this feeling that you're not necessarily putting something extremely unhealthy into your body, where, of course, McDonald's, you get through the drive-thru pretty quick, but you always feel a little bit not great about yourself after you have it. Chipotle has been able to sort of find itself in between those two things. So while I think it's probably the comparison that we have to make, looking at it versus the Shake Shack, versus the McDonald's and some of those other peers, is it almost better to kind of compare this to just subbing to making meals at home or meal preparation or something like that, as the end consumer might be different than the one going to McDonald's?
Yeah, I think that's a great point. The CEO has made it before. I mean, the customers who go to McDonald's several times a week are not also going to Chipotle several times a week. I mean, it's a different customer base. I think that it's tough to find a straight up peer. I mean, I think maybe some of the smaller non-public companies out there are peers of Chipotle, but as far as public company, it's tough. It's a really tough find. I don't know about the stay-at-home cooking. I think I would put them closer to Shake Shack than stay-at-home cooking. But I think you make a great point, is that they've carved out this niche that's sort of just their own when it comes to publicly traded companies. So the comps are difficult for us. I mean, you see who we put up there. We put McDonald's, Shake Shack, and Yum, and that's kind of all over the board. But it is tough to compare to their peers because their peers are hard to define. However, even when you compare to themselves, which I think is obviously a perfect comparison, happiness is down, purchase intent is down. We know that people are spending more on a per visit basis, which is critical, but they're just not growing the way that I think an investor would want to see them grow, given what the stock has done lately.
Yeah, Landon, when I look at your purchase intent versus sentiment, and I see the McDonald's relationship with Chipotle, it's a little bit a shocker that McDonald's is further to the right and higher. Do you think it's the price point? Because one thing about Chipotle, Alex mentioned, it's pretty healthy fast food, as healthy as you can get, but they're not giving this away, Landon. I mean, the overall ticket price is significantly higher than McDonald's.
I think that's a great point. I mean, if you just went food only, I mean, I'd bet my house that happiness for Chipotle is going to be higher than McDonald's. So there has to be another factor. Maybe it's speed, maybe it's price, maybe it's both. But maybe marketing as well. But for sure, the food is better. It's healthier. I mean, I don't think there's a lot of people that would argue that. But the other factors are speed, and then most importantly, price.
And so, Landon, if we highlight that as one kind of like final point here, you talked about the leadership of this company kind of, not I want to say arrogantly, but let's say confidently saying that they're a little bit more inflation immune. If we're starting to see sentiment data trend lower, and you're feeling from the analysis of that it isn't related to quality going down, it may be experience if the stores are busy, but it's likely due to price going up. And we've talked about this in other segments throughout the years too, is price sensitivity seems to be that number one factor right now for really everything. Is that throwing a little bit of cold water on that narrative that the CEO is laying out? And is it possible we could see a tone shift then from the company if this is actually playing out in their sales data?
I think so. I mean, I don't know for sure that that's what's happening, but you got to eliminate all the other variables, and I think that we can agree that the food is great. And so what is it that's causing the happiness to decrease, and what is it that's causing the purchase intent to decrease? I think that price has to be in there. But you're right. I don't know if arrogance is the right word, but he was definitely confident when he said basically like, our customers aren't poor, they can handle this. I'm paraphrasing there, not quoting. I think that it's true for sure that people that go to Chipotle can afford, a family afford to walk out at 60, 70, $80. When that same family of four would go to McDonald's and spend, $30, $40. So I think that I think that's a good analysis, Alex. And I don't know if it's going to play out in the numbers right now. I think that there's got to be a reason why happiness and purchase intent are decreasing. I think price is likely having to do with it. But in the back of my head, I've got the CEO talking about, no, our customers are fine. So, he knows better than I do. But the data is saying that, they're not killing it this quarter. They're not dying, but they're just not doing really, really well. And again, I'm not a big technical trader, but the fact that it can't get past 1,700 two times in the past, and we're there now, and it's run up so quickly to get there, just tells me that expectations from investors are extremely high, and so that bar is going to be tough to beat. So I'm way more comfortable leaning bearish on this one.
Landon Swan, co-founder of LikeFolio.com. Thanks for coming on. As always, good to see you, Landon.
Thanks, guys. Take care.
All right, let's get quickly to our trade here as we